Good morning and welcome everyone to the Money Control live stream. You're watching a brand new episode of Markets with Santo and CJ. Well, it's a fresh week, it's a new week, but sadly, it looks like we are in for some more bearishness by the look of things, Santo.
Well, CJ, don't get so dejected. Success is not final and failure is not fatal. I hope you've heard of that.
I have. That said, yes, there are still opportunities to make money in this market, but we will look into those ideas. But first up, let's take a status check of how the market is, what the market is up to this morning. The Nifty futures that are traded on the Singapore Stock Exchange are indicating a sharp cut for both the Nifty 50 and the Sensex this morning, largely led by a lot of bearishness that is coming out of the US markets on Friday night, as well as weakness in the Asian markets earlier this morning.
Yes, very clearly. And I think this has been kind of a trader's market for a while, and that trend doesn't seem to change anytime soon. Every day you're seeing some fresh set of global triggers, which is again affecting sentiment. I think the key things now to watch out for in the near term will be the LIC IPO. That could keep the market volatile for some time.
Big one.
Yes, because mutual funds will definitely subscribe to the IPO in huge numbers, which means that temporarily some bit of liquidity could be, diverted to that side. So that is something that cannot be avoided altogether. But still, it's a good thing that government is mindful of all this, and probably that could be one of the reasons that it has reduced the size of the IPO price.
You're not really giving me any confidence, Santo, really. I mean, seriously. Anyway, we know what the market is up to, so let's straight away dive into some of the stock ideas that we need to talk about this morning.
Well, ICICI Bank clearly is the stock to watch out for. Excellent set of numbers announced on Saturday, and this been a steady improvement in performance for some quarters now across the board. Be it return ratios, be it asset quality, be it absolute profits, they have all been quite strong. I think CJ, most importantly, what analysts are saying is that earlier there used to be a huge valuation gap between HDFC Bank and ICICI Bank. It's just like the TCS versus Infosys battle, which you saw till some time back. So this is a battle which is still playing out, and analysts are saying that now ICICI Bank has started narrowing that gap, and there's a report by NK in which says that market has fully not appreciated the management premium with ICICI Bank, and that could probably play out in the days to come.
Yeah, I mean, Santo, I have to be very honest. It's very difficult to pick any holes in the quarterly numbers that have come out from ICICI Bank. The only probably slight disappointment would be, the quarter sequential increase in slippages that the company, the lender has seen. And we also have to remember that although ICICI Bank is now, vouching to become the sector leader, given what is happening to HDFC Bank, but the stock is still has largely remained under pressure over the past few months because of what is happening from the foreign investors front. They are just relentlessly cutting their, holdings in banking stocks, regardless of what is happening at the fundamental level. And probably, I mean, despite this sort of a blockbuster earnings that we have seen from ICICI Bank, the stock could remain under pressure in the near term.
Well, doesn't matter if FIs are selling, right? CJ, you always say that retail is the new force, and I think that is probably what led to ICICI Bank being one of the best performers among bank stocks.
Retail has better opportunities to hunt for. That said, HDFC Bank, okay. Well, we know that the stock has been under pressure since the announcement of the merger, and it seems like the management is trying to placate some of that angst that investors have. They announced a dividend on Saturday of about 15.5 rupees per share. Now, this is the highest dividend per share that HDFC Bank has announced in well over a decade. The last one was around in 2011 when they announced about 16.5 rupees, if I'm not wrong. And this is a 3x jump from the previous dividend that the lender had announced. And basically, the stock has remained under pressure for a very long time, and I really doubt that this dividend is going to, do anything to sort that issue out.
Well, CJ, I take your point there. There are a lot of concerns right now, and especially regarding the merger. And this is something that will take some time to play. But you also need to be aware of the fact that this has been a stellar performance over the last decade. The stock has almost appreciated fivefold. Now, stocks can't just keep rising in perpetuity, right? There has to be a consolidation phase at some point in
But
time.
Santo, as they say, past performance is no guarantee for future.
Fair enough,
Returns.
fair enough. So right now there are clearly some concerns at play. One is that,
Some lot
how
of concerns.
the bank will be able to manage the merger, especially the
Yeah.
cost of deposits. How it will be able to bring it down to a certain level because of the merger with HDFC, which has a higher cost of deposits. So these are factors. But I would still say that, given the past track record, one need not be so gloomy on the stock.
Wow, leaning on the past to write the future. Well, I wonder how that bet will play off.
Great Eastern Shipping, again, the stock saw some huge.
Interesting chart.
Yes, it
Interesting
was a big jump in trading volumes on Friday, and also was up about 4%. I was among the best performers in a bearish market. Now, this company has announced a buyback sometime back, and the buyback price is 333. So the stock price is well above that, which means that the company will not be buying back shares, because it is clearly stated that the buyback will be at a maximum price of 333 rupees. But at the same time, the announcement of the buyback has improved sentiment for the stock over the last 3 odd months. And now, because of the war between Russia and Ukraine and the rerouting of the crude oil, which means that ships are now taking a longer time to dispatch and the oil to the consumer countries. So this has led to an increase in freight rates, and GE Shipping clearly is one of the companies that will benefit from that. Probably market has been a little late to cotton onto it, but now we're probably seeing.
I don't think market has been late, because see, Great Eastern, yeah, right now in the near term it seems a lot of technical and some fundamental factors are helping the stock out. We saw the sort of move that it made on Friday, probably because the revision on the shipping freight rates it has taken. But let's not forget, this is a deeply cyclical stock, and it's largely, its performance will be contingent upon how international shipping freight rates are moving. They, at this point of time, yes, shipping freight rates are moving higher, and a lot of analysts globally also, if you speak, they are quite bullish on shipping stocks in general. But as soon as there is visibility that the Russia-Ukraine issue can be sorted out, and possibly lockdowns in China may start to ease going ahead, these rates could come down pretty soon. So I would not really bet that this is not a scenario that could benefit Great Eastern beyond a quarter or two.
See, the thing about cyclical stocks is that you should know when the cycle is turning. Probably if you are able to catch
Timing
that well,
the market.
there is yes.
I thought you guys don't believe in timing the market. The old school folks never believed in timing the market. Was it? Anyway, moving on. Escorts. Interesting, pick. This is Moneycontrol Pro's stock pick of the week, and so far the stock has been down and out. It's fallen more than 15% in the past 3 months. But if you go by the analyst, at Moneycontrol Pro, they are suggesting that this could be a very low risk and high reward, bet in this current market, given that there seems to be some signs of revival in the company's fundamentals. Tractor sales were up month on month by almost in double digits basically, and now with expectations that monsoon will be pretty good, for the farming space this year. Plus, we are seeing agricultural product prices rising, so that should also provide a tailwind to a lot of farm earnings going ahead. Then, given Escort's positioning in the tractor space, the stock will benefit from that, these factors. Plus, the construction equipment side of the business of Escorts is also looking up, given that construction activity is expected to pick up, provided, of course, the government capex and the private capex also, falls through, and we see the, construction activity overall picking up in the country.
All good points, CJ. But I'm slightly concerned about the fact that some of the big investors and even the promoters are trimming their stake in the company. Now, there's a saying that that insider selling, or rather insider buying, is a stronger indicator than insider selling. But at the same time, one can't completely overlook the fact that insiders have been cutting stake, and which usually tends to indicate that this might probably be a peak valuation, at least for the time being. So I would clearly look at the fact that Rakesh Jhunjhunwala has kind of reduced his exposure to the stock, made use of the open offer to tender his shares. So that, I think, is something that could weigh on the stock. Plus, you need to see some real uptick in volumes. FY21 was a great year for Escorts. Now, I'd rather wait to see those kind of numbers once again before taking a firm view on the stock.
Santo, promoters because the old promoters may have been cutting stake, but a new, higher caliber promoter has come in the form of Kubota. So I would not really read too much into the promoter selling bit. Lastly, I think we have Hindustan Zinc on our list, on our radar. Basically, very good earnings, decent earnings, inline numbers, but the FY23 guidance was not really, something to enthuse the market and investors. It was much below what analysts were expecting. Given the sort of, the production numbers that the company came out, more than 1 million tons of production for the first time in a long time for Hindustan Zinc. Current supply, there is an argument that, zinc prices will rise higher because of a current supply deficit, but that deficit may not last. Credit Suisse expects zinc prices to actually trend lower, later in this year, because it does not expect the tightness in the market to last. And I think with that, the market has opened. Let me just check my money control app and see how much
Nifty
crack
has
we
opened
have.
below the psychological 17,000 mark.
Yes,
It's already
more
down
than
over
600,
200 points.
Yeah, more than 600 points on the Sensex.
Nifty Bank is down over around 1.5%.
Yes, nearly 500-point cuts on the Nifty Bank. So
yeah,
things are not looking very pretty.
All-round selling. I think no real surprise there, given the huge sell-off that we had seen on the US markets on Friday. So
absolutely.
ICICI Bank is up about 1.5%. That stock is reacting to good set of numbers, but overall Nifty Bank remains under pressure.
Santo,
down by
an
more
interesting stock. BPCL is down around 3%, and news was emerging earlier this morning that possibly government has withdrawn its divestment, process for offer for BPCL. So yeah, things are not looking pretty on that counter.
That could, probably affect sentiment for some of the other divestment candidates as well.
Unfortunately, a lot of retail investors are in a lot of these PSU and divestment,
They like the latest
so
stories, the stories of the season.
Yeah, you will never miss a chance to take a dig at us, right?
So CJ, what do we have on sectorology today?
Well, things are getting from bad to worse for FMCG. We all know the concerns around demand and the rising prices of inputs for FMCG. The recent earnings that are expected to come in from next week onwards, they will show that margins are falling. At the same time, volumes are also, slowing down. But just before, just after we closed trading on Friday, news came out that Indonesia has decided to ban export of crude palm oil. Now, Indonesia is one of the biggest exporter of crude palm oil. That said, around 50% of India's own crude palm oil import, because we are among the biggest importers, comes from Indonesia. So clearly, there will be two impact of this. A, crude palm oil prices are going to shoot up through the roof in the international market because there will be a supply decline. At the same time, this is going to be a body blow for FMCG companies for whom crude palm oil consists about 25 to 30% of their overall costs, and this is going to shrink their margins big time, and that is coming at a time when margins were anyway heading lower because of the overall commodity price inflation that we have been seeing.
Yes, CJ, things are going from bad to worse for FMCG companies. Already inflation is hitting demand as well, and now you have input prices going up to a point where it makes things further difficult for FMCG companies. And there's what has completely changed the picture, or rather thrown the spanner in the works, is the Russia-Ukraine war. I think till then the general consensus was that probably prices could cool off by about September. Now there are two problems here. One is that production in Malaysia itself has been hit because of labor shortage because of the pandemic, and on top of that, Indonesia's decision to ban palm oil exports, that has really come as a bolt out of the blue.
Yeah, things are not looking for your defensive bet, Santo. I mean, usually you would expect that in such volatile markets, FMCG stocks usually are havens for investors to hide in. But if the haven itself is cracking, I don't know where investors can go.
CJ, if let us say market sentiment were to worsen further, just have a look at your mid-cap stocks and just have a look at FMCG, and then you'll have the answers.
We will see. Lastly, just to add to that, that FMCG point, among stocks, I mean, if you carefully look at it, CLSA expects that HUL, Hindustan Unilever, and Godrej Consumer will probably be the worst hit within the entire FMCG basket. Of course, it should impact most of the FMCG counters, given that crude palm oil is used in, n number of products that FMCG companies make. But HUL and Godrej Consumers exposure is much larger than a lot of their peers. So those would be the two stocks to really watch out for in today's session.
That said, what is in Andar Ki Khabar today, CJ?
Oh, Andar Ki Khabar. Well, I have an interesting, bit of activity that I noticed, and the stock is a microcap stock. It's known as Evixia Life Care. It's in the edible oil business, so probably in a way it's actually beneficial. What the entire issue that is happening with Indonesia and palm oil is actually beneficial for Evixia Life Care. But interestingly, the promoters were very active on the counter last week, and they actually cut their stake. Now, this selling from promoters has come after many years. In the past 12 to 13 years, promoters have been active only twice on the stock. Once in 16-17 when they were actually accumulating, the stock. And second, this time last week, when we have actually seen selling from the promoters. And the timing is very curious because the business prospects are looking up, right, for the company. We know that edible oil companies have been, in flavor with what is happening with Adani Wilmar and Ruchi Soya. And so you would expect now with the Indonesia thing now coming in, largely things are looking up. But promoters have decided to sell. And as you mentioned earlier, the selling is always a bigger indicator.
No, the buying is the bigger indicator.
Yeah,
but at the
okay.
same time,
Yeah.
the timing of the sale, as you mentioned,
And
probably
exactly.
that.
And also the thing is that it's not like they have made a lot of money on the counter, because the last time when they were buying the stock, they bought it at an average price of 6 to 7 rupees per share, right?
Probably they want
around, sorry, my bad, around 10 to 12 rupees per share, right? And right now they were selling it at around an average price of 6 to 7 rupees, which I mean, it's a very curious thing.
Maybe they want to share wealth with other retail investors.
I don't know what wealth they are sharing, given the stock has cracked what 40-50% since its heights.
So the other stock which seen some good activity over the last week is Navkar Corporation.
Oh, it was on your radar a few weeks ago.
Yes, so some bit of institutional selling did happen in that stock a few days back, and it seems that most of that supply was absorbed by HNIs, and suddenly there's been a huge rush there, mostly from retail traders, huge spurt in volumes as well. But at the same time, it's not a great fundamental story, at least for now. The earnings doesn't seem to justify that kind of expectation, but right now it's more of a demand supply mismatch, looks like.
Yeah, and Santo, just a final update on the market. It seems like we are still holding steady at the lows of the session so far. Sensex is down about 1.2%, Nifty is down about 1.3%. Bank Nifty has seen a little bit of recovery. We have recovered around 150 points from the lows of the day, and unsurprisingly, it's ICICI Bank which is helping out that index. The stock is up about 1.4% in a weak peak market.
Well, that's all that we have in this episode of Markets with Santo and CJ. Thank you for watching, and do have a nice day ahead.
Yeah, and we will catch you live at 3 p.m. when we wind down the day's action. Also, please post your feedback on the comment section below, and follow us on the social media links that are at display on the bottom of your screen. And yeah, have a great trading session. Although things are not looking that great from the bulls' perspective. Thank you.
Thank you.